What's happening, family? I hope everyone had a great and blessed weekend with their families and loved ones. So I was going over some charting work with my 5-year-old daughter because she likes me or she likes watching me doing that, and every now and then she helps me marking up charts. So but while I was busy doing that, I thought, you know what, I also going to make a recording about how I mark out my structure, identify the liquidity areas, and all that. So perhaps with a possible outlook for the coming week and what to expect. Without further ado, let's get started, right? So let me quickly get the EURUSD chart in front of me. So we are using the FXCM provider, and we are now on the 15-minute time frame, right? So looking at what happened in the last week, so we are here at the beginning of a Monday, November 21st, right? 22nd, sorry. So from the 15-minute time frame, we can see that price was pretty bullish, right? Like the whole week. So before I am going to analyze this part, I would like to do a quick structure mapping, right? But also a little perhaps case study in what happened, so I can not anticipate, but look out for possible entries should that happen, right? Should price action give us a proper setup to go with. So let's get started. So just by looking at this, right, I can immediately identify this. Oh, pardon me, let me use a bigger dot like that, and let's give it a red color, right? So I start my structure mapping from this point on, right? So this would be our higher low, and if I look structure wise, like mechanically, so to say, where would be my higher high? Well, immediately I see this here as my higher high, right? Higher low, higher high. Now, why did I mark out this as my higher high? Because everything in between these 2 points, right, is basically your internal structure, okay? Why I see it like that? Because if we look at this movement, I will change the line for a minute. So let's do like 3 pixels, right? And let's give it a nice red color so it stands out. Okay, so this is basically your internal structure, right? The red colored line. Your basic structure leg is like this, right? Oh, okay. So this is basically one leg, so to say. Now, why see I this as one leg? Because if we look at here below, there was not once liquidity taken out, right? Until this point up here, right? This is your inducement. So let's mark that one like that, okay? And after the liquidity is taken out, right, I will mark this as my valid high point. And these are all like wrong markings of break of structure, okay? these are not real breakout structures, because as you have watched my previous videos on structure mapping mechanically, in this area there was not once price taking out or liquidated, right? So the actual move, as you can see it here, is actually something like that, right? Okay, and this would be then your like internal. Whoa, guys, what happened? Okay, very weird. What's this? Where are my markings all gone? Wow, okay, doesn't matter. Let me just quickly mark those anew. Right, okay. That is our inducement right there, okay. And this one could be considered your engineered liquidity, but within your minor structure, or this one leg, right? Because again, as I was showing you guys, and now let me quickly change that again. Like that, right? Okay, so this would be your internal structure, and within the internal structure this could be your inducement, and this could be your engineered liquidity. So let's change that into another icon like that. I use this icon as my engineered liquidity, but yeah, it doesn't matter, right? Everyone uses their own thing. So let me remove this one quickly. So the inducement got taken out, right? Price came never back to take out the engineered liquidity within the internal structure, and eventually it did break out above this higher high here. So this would be a valid break of structure, okay? Because again, everything in between this is basically your internal structure, right? And if we look at the next higher low, that would be this point here, because after the inducement or liquidity was taken out, this was your most recent or lowest point, right, in this here price action, okay? Now, where is our next higher high? Let's have a look. And I immediately identify it here, right? And let me mark up also my next higher low. That will be like that one. And then if I will come back to this part, because this part has caught my attention, and I will explain it a bit more in detail why this part is very important to look at, right? Even though it is previous price action, but it's always good to have perspective, right? So I will explain into details in a minute, so you can possibly train your eyes to avoid everything that is going on in your internal structure. Although, you know, some people read it wrong, unfortunately, but I will come back to that, okay? So let's keep on with the structure mapping first, and then I will go into details. Okay, so this would be my next higher high. Why? Again, if we look at these areas here, nowhere was liquidity taken out, right? Until this pullback happens, right? So your deeper pullbacks, again, are most of the time just liquidity sweeps. And now this one, right, is my confirmed higher low, okay? So if we look at it like structure-wise, it would be something like this right here. Okay, so basically this is your like major structure. Okay, and as we know, no one movement is ever like impulsive, right? It always happens like in that, and then, well, you know what I'm getting at, right? So yeah, this is basically your major structure, your mechanical structure. And now, why this one here is your high or low and not this one or this one or this one, right? Because if you look at it, most people will see these minor or internal structure breaks also like a break of structure, right? So let me mark these one up really quick like that. And also let's give them a different color, like red, for example, for not correct, right? Because why? Look at this. I bet some traders in the past week had become victim of the following, okay? Because they see these as a break of structure. So naturally they would like, okay, this here is my order block, right? And let's give this immediately the color red, because this is not an order block, this is a smart money trap. Same goes for this one, right? Like that. Okay, I'm just showing you guys this so you can train your eyes on that, right? So focus on this right here, your major structure, okay? And if you can identify like an inducement point, then you wait until the liquidity is taken out, and then you can probably benefit from the continuation move, right? But as long as there is no liquidity taken out, don't mark your major structure with the incorrect, how can I say it, drawings, all right? Because this is not a break of structure, okay? And here people presumably had, wait a minute, this one actually, yeah, okay, didn't saw that one, but this one is actually a point of interest, right? So let's study that also. But these ones definitely are smart money traps, right? Because here was liquidity created, here was liquidity created, right? And then price came, tapped those in from the zone, and that broke structure, right? And then immediately took them out. But also the traders who jumped in here, right, at this area, price did go up a little, and then boom, took them out until price came back to the extreme point of interest, right? So yeah, if you had it entered from this point, then no problem, but every other point in internal structure would have been like a smart money trap. And look, the same thing happened here, right? Because let me mark this one quickly here, and that is the interesting thing, right? And some people mark this also like a order block for sales, right? Because think about it, everyone who had saw this as an order block got taken out here, right? Everyone who had entered here because of these BOS, right, got also taken out here, okay? And then what happens? They think that price is change from being bullish to bearish, and they expect price to come back to mitigate perhaps this extreme order block, and then they expect that the price, you know, bounces from that area to the downside, right? So this here is very, very important to recognize, because the market simply traps buyers here and here to take them out, and then manipulates them into thinking that, you know, price has reversed, right? BOS, and then they expect like it will sell off from this possible order block. But what happened here, right? So that's why it's very important to identify your major structure, right? This could happen, perhaps, but 9 out of the 10 times, believe me, this, what I show you just right now, that happens, not what you think. Because these are just realities, you know. I'm not telling a fairy tale or something, just aligning facts, okay? So if this is our higher low, higher high, higher low, why is this a valid higher low? Because the liquidity was taking out. Here, none of that happened, right? So this is not a valid higher low, right? Because price did break here above, right? And then came down, but in this move here, right, there was absolutely no liquidity taken out. If you look at it liquidity wise, then this right here is your inducement, right? If price came back to take out the inducement, then yes, this move, probably it will be a bit below here, but then it would be a valid higher low, because the liquidity is taking out. But it did not happen, so I do not recognize these as valid break of structures, right? And then what happened? Only after some inducement got taken out by this move, right, I will validate the break of the last or most recent high as a break of structure, okay? Because now this happened, right? Like something like this, okay? Price came, gave a little reaction, and then moved up and closed above this area, okay? So yes, a valid break of structure, definitely. And the same goes for this one, right? So this is absolutely a break of structure, right? So these ones, again, not valid. Let me remove them just quickly, because everything between now these 2 points, right, is basically your internal structure. And what happens in majority within your internal structure, price will take out the liquidity of the momentum or bias, right? In this case, bullish, and yeah, all these liquidity points got taken out, stop point, whatever you want to call it, and then people got trapped here, right? So in this case, this would have been your high probability entry point, okay? And if you look at it like, you know, pardon me, if you look at it like structure wise, like something like this, right? Look what happens within your internal structure. Okay, so this move here that broke your structure, this could be your engineered liquidity, because this is your most recent range low and this is your most recent range high, right? The first pullback, and especially if that pullback breaks a previous high, in this case a valid or confirmed break of structure, right? You can mark this one like that as your engineered liquidity, okay? So let me do that very quick. Okay, now what happened after, let me just do it like that, okay? And now price came back, this, something like this. Okay, and then something like that, right? So if you look at it structure wise, where would be your inducement? Well, let me show it to you guys. Your inducement would be here. Okay, if you have guessed it right, then you are grasping the concept of inducement. And if you have marked it at other places, then well, it happens and we learn as we go, right? But the first pullback within the range now is our engineered liquidity. The most recent pullback, right, is our inducement. Okay, so after the inducement got taken out, and that's why again I won't focus on the internal structure here. After seeing that the price topped out at this level, point of interest, because you know, if you are looking for an entry criteria, it definitely would not be around these areas. So wait until the price shows you his hand, so to say. Look, and it topped out here, right? Engulfing candle, and from here you could go to a lower time frame, for example the 1 minute. And let's have a look what we can see on that time frame. Let's go back a little bit more, right? Okay, just a tad more, I believe. Okay, right? So now if we look at this right here, what did happen, right? Because here the candle that kissed or tapped or mitigated got swept. It was already like a candle wick, right? But that wick got swept. Like this is basically your sell side liquidity taken out, right? So you can also name it like that, SSL. Okay, and then look here. Okay, like that. So this candle took out the liquidity from this wick that mitigated the point of interest, right? And the next candle was like almost a full-on body candle, right? So definitely an engulfing candle. Okay, so and what you can have done from this point, well, if you are experienced and advanced enough, you could enter it with a single candle mitigation, and you could have even gone for an entry like this, but this would be a more safer stop loss, so to say, right? And then perhaps you can target an area like oh, let me just do it quickly like that, right? So let me remove this one right here. Okay, and where is our, okay, so you could have done something like this, right? Yeah, and that would have been like a 8.7 R winning position, right? Because you are following the momentum, the bias with your structure mapping and identifying your liquidity areas, right? And your smart money traps, possible smart money traps, right? So that is one thing, right? Let's get back here. Okay, so that's why me personally, I would focus on these points as my major structure, right? Oh, I believe I deleted the wrong, yeah. So that would have been our higher low, right? And everyone here, buyers, sellers, got taken out, and then of course what did price do? Moved up higher, right? and then it topped out here. Okay, so again, if we look at the most previous pullback, that will be something like this, right? So this could have been your inducement below, like that. Okay, and then price took out the inducement but failed to go up. And again, like as I said many times, inducement areas are like 50-50% probability, right? Sometimes they work and sometimes they go for other areas, right? So but that's a decision every trader has to make for himself or herself. Okay, so now we have identified our structure, and we did a little case study what happened here, right? So let me remove these just for a minute, right? Because here the inducement was taken out, and here also, okay, here also. But then what happened? Look, this was your most recent higher high, okay, and then inducement got taken out, but then failed to make a new higher high, right? So now everything basically happening between these two lines, right, is your internal structure, okay? And then what happens? Now, some traders will mark this as a chock or change of character, right? But basically it isn't, okay? So I will make a different video about that, or maybe I will just simply post like a diagram perhaps. So let me think about that. Yeah, so this is definitely an inducement, and don't mistake it for a change of character because it broke down, right? Your real change of character is happening here, because this is your valid, like, new lower low. If you look at it like this, right? This would be your lower low, and then your higher low, and then your lower low, right? So basically you are seeing here like a change of character in the making. So let me mark this one up quickly as a chock, right? Because now your recent higher low broke out to the downside, okay? It didn't sweep something like this wick here and then move up to the upside. No, it broke and it closed below it. And now perhaps if we look at this area, right? Let me go just quickly to a, yeah, okay, definitely. Look at this here. Just a second, guys. Right. You see this candle here with this huge wick? Now, this is what I call an IFC, right? So, short for institutional funded candle. Okay, but you may call it like a point of interest, or I don't know, a refined order block, give it a name. But after price mitigated that area, right, took out the inducement, failed to make a new higher high, and then it ranged a little bit, right, and then it took out the most recent higher low, higher low. And then now we could possibly expect a change of character, okay? So now if we do our analysis purely on what happened on the last 2 days, like Thursday and Friday, with the, not the anticipation, but with the outlook to what could possibly happen with the start of the beginning week, next week, right? Now, after this happened, look what happened here, right? Now, let me just quickly mark these up for you guys. Okay. This would be our, like, engineered liquidity. and let me do it like that, right? Or even equal high liquidity, but I call it engineered liquidity. Why? Because now the change of character is in the making. Look, this was your, oh, pardon me, this was like your first pullback, right? Between your high and low, okay? So now, and let me also, I see here, like this could be your liquidity, your inducement. Both are both are liquidity indeed, like your inducement and engineered liquidity. It's just different names to identify them, right? Okay, so this would be your inducement. Why? Because this movement here, okay? Not only it broke out here, below your most recent low, but it also broke out and closed beneath your major low of your major structure, okay? So very important to identify those things, and then you can identify like your liquidity areas, okay? Because if we also put order flow in the play, look, let me just, this was our last push up high, right, to the upside before market collapsed. Well, not collapsed, but turned to the downside, right? So this could be your order flow area, just sitting above your engineered liquidity, and this could be your inducement, right? So now we are getting every time a step closer to get an idea of what the bigger picture is, and perhaps have ideas of what to expect, right? Because if this is your higher low and this is your lower low, then I would say, oh, let me grab this one here. This would be also now your higher low, right? Yeah, it changed here, and this would be your higher low, lower low, and as long as price does not come back to take out this or even this one, we are ranging, right? So let me give this one a different color like that, okay? Because here green, red, green, and now we are going from purple, red. Well, purple is not there yet, but the current lower low would be like this, right? Okay, structure wise, not break of structure or whatever wise, but structure wise. Let me give this like an orange color, okay? Let me get this one a little tad lower, okay? So now we could look at it like this, right? Something like this, okay? This is now your major structure, and everything happening in between is like your internal structure, okay? Because remember, we are at the 15-minute time frames, right? So now looking at the structure liquidity wise and putting the whole picture together, I would say, you know, we have inducement here. So one scenario could be that price perhaps will take out the inducement and then go lower, or another scenario is engineered liquidity. And since the both are very, very close together, I even expect that the extreme one, in this case, the engineered liquidity, will be taken out, you know? And if it also does like a mitigation of this order flow right here, then that will only add more confluence, right? To place our shorts, okay? Now, also, while I'm doing this, I see this candle here, right? This is a high probability candle. I will mark it out like this. This could be a high probability area to look for entries to go long, right? Because basically we are looking at the bigger picture, right? Oh, let me get the 1 hour also, you know, every time the market makes like, you know, and now we are basically mitigated something here. So yeah, but looking at the major picture, right, still looks bearish, but from the 15-minute time frame we could definitely look for short-term shorts positions, but also short-term long positions, right, to ping pong in between the range and liquidity areas, so you can benefit from both directions, right? Just possibility, guys. So now let me give this quickly a different color, like purple. Okay, so this could be your high probability point of interest. Why? Because the black candle, liquidity below, got taken out by the wick of this like gray candle, right, before continuing up. Okay, so this here I would identify as a possible smart money trap. Let me do it like that. Okay, let's mark it red. Okay, so I would probably mark this as a smart money trap, but this would of course trap possible buyers, right? Should the price decide to continue down from here, right? It could tap and then, you know, go for the liquidity like we discussed here or here, and then from there, you know, it could continue down, right, like that. Okay, it even maybe wick through, right, just a wick below, above this area or this area, and perhaps even while doing that mitigate this order flow area, right? So it could be even a wick, but I think, you know, yeah, that's the reason why this could be a smart money trap. Why? Because in this movement here, nowhere got liquidity taken out. Okay, so your first liquidity point is here, your inducement. Your second one is your like engineered liquidity. So that's why I think this here is a smart money trap. Yes, price may well give a reaction, right? Everyone expecting the price to be go higher, and then, you know, it could, like I said, give a reaction and then give a proper entry criteria for you, right? Take out the inducement and then continue lower, because remember, there's still a lot of liquidity here to be taken out before probably price will continue the bigger move to the upside, right? If it's going to do that, of course. Otherwise, yeah, it could also continue further down, right? But looking at the short term, what happens here, okay, and look at what happened here also, this here, some traders would have seen this also like a breakup structure, and then they probably thought, you know, I see here this doji candle as the zone that broke structure, right? So even some aggressive traders who were looking for sells, right, like this, they got trapped and immediately took out, right? Because why this did that happen, you may think or ask? Because again, in this whole move there was no or whatsoever liquidity created and taken out. The first one sitting here, the second one sitting here. So if the market will continue to the downside, chances are high that it will take out the liquidity first, right? either the inducement or the engineered liquidity. That's why I also believe, for that same reason, that this is a trap, right? So yes, again, it may give a reaction, but then eventually, you know, just like what happened here, but then in a bearish scenario, right? Instead of a bullish scenario. Okay, so now let's move on. Oh yeah, and perhaps, look, should that happen, right? Should price come something like this in this area, okay? Then you could look for a possible short-term long position until either the inducement or the engineered liquidity is taken out, right? So price does not have per se to mitigate any order flow or order block point of interest, but if it does, then it adds confluence, you know. But yeah, you could probably like target your engineered liquidity area here, okay? And then if price, you could get out, take your profits, and should price then give you like a single candle mitigation entry or another entry type from this area, like something like that, after giving you a reaction, right? Create inducement there, take it out, and then, so it will be basically, let me just move these pieces. Yeah, I think you get my point, right? Oh, sorry guys. That one, yeah, something like that. Okay, so price first needs to create inducement, take it out, and then this could be your entry point, right? And then you can target either the inducement or the engineered liquidity for your short-term buy or long position, get out, and if the market shows you on a lower time frame something like this, right, it reverses again, and the same what happened here, but only on a far more smaller scale, of course, right? So it creates inducement, it takes it out, and then from here you could either enter with a single candle mitigation. If that does not happen and price continues down, then you could use this area as your valid point of interest, right, and enter from the bottom, put your stop loss above, right, because now the liquidity here is taken out, right? So that would be also a high probability entry criteria. Okay, so yeah, that will be scenario 1, so to say. And now let me get me my tool to zoom in. Where is my, because if I look up here and if I zoom in, I believe it was, yeah, here, this one. Oh, let me just quickly move the chart like that. Okay, look what happens here, right? I see here, and let me mark that one just purple to differentiate it, right? But look what happened here. Like that, right? Very minimal, but this wick here took out the liquidity from this candle, this doji candle, and this candle, right? And yeah, this could be your high probability point of interest, right above your inducement sitting. And the same thing, of course, here, right? Your engineered liquidity. Only now you focus on your order flow instead of your wick or candle, right? Because this was your last bullish move before the price changed its character, right? So either price may well tap there and then go there, right? Oh. or it may do that after the engineered liquidity, right? But again, you have to go to the lower time frames to use your entry criteria or entry models to get high probability entries, okay? So very important, because now, like I said before, let me just quickly, price may as well do something like this, right? Take out the inducement here, and from there it might continue down to perhaps this area, right? But yeah, you can like profit from this move here, and perhaps also this move here, right? And after price comes here, you get out, wait, and read the price action on the lower time frame. If you do see an entry model, then yeah, definitely you can take a buy to sell position, and perhaps if price comes here, right, you get out again, and you can do like a sell to buy position, right? Okay, so, and within this area, let me just quickly move these a bit like that, something like that, yeah. Okay, and like I said earlier, let me mark this one out again. If price taps here, then you could probably, but you know, again, from the lower time frames, you have to look for your entry criteria, right, or your models, to benefit from a short-term buy position. And then yeah, you could perhaps look for your internal change of character, so to say, and then look for something like that, right, until, well, let's say your engineered liquidity area here. Now let's make this one a bit smaller, let's make it also a dot, and let's even give it a different color. Okay, so this would be your major move, right? But within this major move, you could look for this gray dotted line, internal move, right? So then first you let the market react on your area here, and then you wait until it creates a inducement point, and then inducement, right? Okay, and after the inducement is taken out, you could look for, like I said, a short-term buy position until the engineered liquidity area. Okay, that could be one scenario. Now we said this could be your point of interest, right? And this is your inducement, and this is your engineered liquidity, like that. Okay, or of course price could do something like this, take out the engineered liquidity, does not has per se to mitigate this area, but if it does, okay, that would be very good to add confluence. But if it doesn't, no harm, because yeah, it targets most of the time liquidities, right, and not points of interest. So this could be like, just remove this quickly like that. And a second scenario we could look for would be something like this. Now let me just quickly get these back here, right? Okay, and don't worry guys, I will also make screenshots from my markups, right, and post them later on also separately alongside the video, so you don't have to make screenshots from the video if you'd like to do that. But yeah, so the first scenario I just show you guys, and a second scenario, if we look with perspective, again very important, I could say, you know what, this could be our inducement, right? Because if we look at it now, something like this, right? Minor inducement, okay, And if we also add order flow to the picture, like again, the last major move to the upside, let me pull it up like that, and let me give this quickly, well, okay, green, I can live with that. So this would be your last major move to the upside, right? These two gray candles, and then price broke out below it and then came back, right? So now if we look at this area very close, I can see definitely a liquidity sweep, right? Something like that. Okay, and let me just quickly mark this as my sweep. Okay, so now your inducement is taken out, right? And price mitigated your order flow. Okay, and then before it broke out, it came back, right? And it liquidated this area here. It did a liquidity sweep and then broke out to the downside. Okay, so now let me just mark this one quickly as order flow. Oh, let's make it a little bit, and let's make this one green. Well, actually, let's make it fat. Okay, so now this green area could be your order flow, of course. Okay, and you can also do the same thing here. Okay, if you would look at it like order flow wise, look at this area, right? Again, the most recent or last push by the buyers, right? And then price broke out to the downside, right? And this would be perhaps also your order flow area here. Let me mark this one as an order flow also. Okay, and now we have our inducement, we have our liquidity sweep within the order flow. Okay, and we have our minor order flow area here. So what would be the next possible scenario? Well, if I just quickly mark this area as a possible target, because your low is now confirmed after taking out the inducement. Before that, this was not your low, because price may have, well, instead of taking the inducement out, go like this, right, like this, and then boom, it may continue further down and then eventually create some inducement and then takes it out and then continue further down, something like that. And then this would be your valid low, but also a break of structure if price breaks and close below this area, right? Okay, because now that didn't happen so far. Sorry, that did happen. Your inducement got taken out, and liquidity also, and yeah, that will validate or confirm your lower low. And should price now break below this area, then that will validate your BOS, right? Break of structure. Very nice. But yeah, you know what I'm getting at, right? So in this scenario, I would have looked something like this, right? Let me just quickly draw it out for you guys. So perhaps price does something like this, just like I draw it earlier, right? And then goes to the downside, something like this, and then comes back all the way, perhaps in this order flow area, but also I will point that out later, but let's say it comes back down here, and then you could also go to a lower time frame and then look for your entry criteria, right? This is your inducement, wait until that's taken out, Okay, and then you could perhaps look for this area to target, or, well, it all depends. This would be also a valid point because we are not in a too higher time frame. So, but for the time being, let's say something like this. Okay, let me get this one shortened in, and this then, of course, here. Okay, now if we add something like this here as our inducement, let's mark that one out, inducement above, and let me also change this to something like that, just to stand out. Okay, so now what could happen? Price could break below your most recent low, right? In the process, maybe it creates some inducement, and then you can wait, right, to for price to take out the inducement. And again, like I showed you in the first scenario, you could look for a possible, like, short-term buy position up until, like, perhaps here. Okay, and of course this then would be your lower time frame entry criteria, something like this, right? Price comes down and then does a miniature chalk like this, right? And then it fails to make a new lower here, right? It makes inducement, it takes that out, and then perhaps with a single candle mitigation you could enter here, or yeah, you can enter something after it comes back to your point of interest, right? It all depends on your entry criteria and how aggressive you are. So like everything, there are conventional or conservative ways of doing things and an aggressive way of doing things, right? But yeah, you could look after the price comes back within this order flow, right? You could profit or benefit from this short-term long position, get out here, and then on the lower time frames you could look for your lower time frame entry criteria and models, and then, you know, it could be perhaps something like this, like I showed you already, right? Price gives a reaction and then comes back, creates an inducement, breaks a minor internal structure like that, right? And then after the inducement is taken out, you can look for possible short positions, right? And even if you look here, well, I don't think that will be like crazy insane accuracy, but just because after all we're busy already, right? Let me point out this candle here with a different color, like gray perhaps. Okay, look, this this one candle here, okay, it already took out the liquidity of the previous candle, right? So I was marking out this gray candle, right? So if that would be a possible like point of interest to be mitigated, but yeah, again, personally I think the chances are very small that would be like crazy insane accuracy, but nevertheless it could be, right? Because it is within your order flow area, it took out the liquidity of the previous candle. So just to keep that also in mind for perhaps your lower time frame, because this happens within your order flow, but it might also happen from this area, or perhaps even with just a candle wick, right? Let me mark this one up like that, make it also change of color. Okay, so this could be also your scenario, right? It could wick through it, and within your order flow area, if you see this pattern, your entry model, like inducement created, taken out, liquidity, then you could also look for your entry models from here, like this, okay? So yeah, that's just two scenarios I had in mind. I wanted to share it with you guys, right? And I will post the scenarios separately as a screenshot also within the community. So yeah, let's see what price action will show us in the coming week, and hopefully it will give us some proper setups to go with. But yeah, just my view of things, you know. And I'll catch you guys in the next video. Yeah, happy Sunday everybody. Trust your system, trade responsible, and I will catch you guys later. One love. Bye.